This is Morgan Martindell with a quick pitch on Greystone Logistics. Greystone is a greener, more efficient pallet system than the incumbent wood pallet system. Founder Warren KRUGER has put in decades of hard work, and the result is sticky recurring revenue, economies of scale on the order of approaching 100 million here and growing, and world-class customers, including Walmart, Pfizer, and some of the world's biggest beverage companies. So they're also not impacted too much by coronavirus, but they benefit from the payroll protection program. So this company is innovating in the supply chain for the absolute world's biggest companies. The stock is cheap here because of investor fatigue involving unreliable order patterns, a previous take-private attempt, a fair amount of debt. But really, at the end of the day, this is a very engineering-oriented, non-promotional management that's invested a lot of personal capital and many years of time and effort. So plastic pallets are more environmentally friendly, more durable, and less dangerous than wood pallets. For example, they're less likely to break and less likely to catch fire. And they're also cheaper on an overall total cost of ownership basis, while the initial purchase price is more expensive. They have many miles of pallets, but one of them is 45. But for $45, you can use that pallet many, many times. So it's the perfect type of pallet for a very large company with very intense, repetitive needs, like Pfizer or Walmart. So Warren KRUGER previously built and sold 2 companies, and he's put something like 15 to 20 years of work into Greystone. He owns a lot of shares and previously tried to take the company private. He's been buying over time. He also has previous business contacts who own a lot of the debt. And I think he owns some of the debt too, so he's super involved in the company. And he owns a few other plastics companies too, so he's he's a bit of a business genius, basically. So this is a manufacturing business with a lot of equipment and a lot of employees. They've been buying more equipment and hiring more people steadily. They have some competition in Australia, but overall they're definitely have an advantage position in the U.S. market. They have basically very, very big, prominent companies are their customers, and they started with just one super big customer, Miller Coors, and they've been diversifying onto that, and now they're ramping up with Walmart. And they have a big existing pallet pool with their customers, which gives them a big advantage compared to an incumbent, because if a customer already has Greystone's pallets throughout its warehouses, it's going to be fairly biased to keeping Greystone as its pallet provider. So the big story right now, in why the stock has moved so dramatically, is gross margins have really started improving. This was going to happen for a long time, and it just took a while to really make it happen. When you've got a business that's approaching $100 million in revenue and growing quickly, and you're trying to improve gross margins at the same time, that can be hard to do, but it's finally started to happen. They went from 10% gross margins to 20% gross margins year over year. Simultaneously, they are deleveraging and paying down their debt, and they've showed pricing power in the most recent 10Q. So profitability is absolutely, I think it's tripled or something year over year, and it's probably going to keep going up. So this is a very dramatic situation, and it's happening in the middle of a stock sell-off caused by coronavirus, which actually is not going to affect this company that much. So it's just this incredible situation because there's just so much happening at once. It's creating a huge price move. So this is a market leader with economies of scale, sticky revenues, and world-class clients, and basically investor fatigue and a few things holding back the valuation, and which is making it too cheap here around 10 million market cap, and a very long runway for growth. Now the annual profit from this thing is probably going to approach 10 million within 1 or 2 years. Because the quarterly profit was just something like 1.5 or 2 million. And that quarterly profit is probably going to increase because they're still ramping up with Walmart and other customers. And they claim they have more room for margin expansion. So I mean, this should definitely trade over 4x earnings, right? So at 4x earnings, this stock will go up like 150%. So this stock is a buy, at least until it goes up another like 30 or 40% from here, I would say. So that would put it over $1 at least, and probably over $1.50. So anywhere under $1 should be very, very compelling. And they're really building an interesting business that's generating a lot of value in the supply chain. So it's an incredibly interesting story, and it should be very profitable here. Thank you very much for your time.